Okay, good morning, good afternoon. Hello, everyone. Welcome to Estate Planning Case with Brad Hyde. I'm Emily Sorensen, and I'm the Business Development Executive for Calgary in Southern Alberta. I'm very honored to introduce Brad Hyde today. Brad has worked in the insurance industry for over 30 years. He has specialized in the area of supporting advisors on large cases or technical casework. He has worked with two major life insurance companies and the top two Canadian MGAs. Brad works comfortably with advisors, clients, accountants, and lawyers. He is focused on developing relationships with advisors and clients to help move estate planning forward. I'm very excited to get going today. Brad has said that it'll take about 45 minutes and that we'll hold all questions to the end. Please put your questions in the chat to all, and I will address them at the end. Thank you.
Great, thanks Emily, and welcome to everyone on the call today. Thanks for taking the time out of your week to be with us. My goal for today is to give you further insight into how we can support advisors on casework, and I'll do this by talking about a specific case that I worked on with an advisor named Scott Pollock recently. So my role at IDC, I'm just going to go on a quick overview on that first, is really two tiers of support. And the first area of support is general information, where I provide support on concepts and products and general case discussions, and then education like today's seminar. The second area of support is case support with a split, and that's when we get involved with a client or their professionals directly. So as you know, there is a team of people on the tax and estate planning team across Canada. There's myself in the West, Chris Britton is in the Maritimes, and we have Frank Abate based in Toronto but works nationally. And I'll be giving you their information on a slide near the end of the presentation for your reference. Scott Pollock is the advisor that I worked on this case with, and unfortunately Scott's not able to be on the call today, but I have recorded Scott's comments to share with you today. And Scott's been in the business around 15 years, and one of the things I did when I worked with Scott to record these is we tried to embed these into the presentation. So I'm hoping that you can hear the sound well enough, but these are all experiments as we work in new formats through this COVID environment that we're working in. So starting out, I wanted to talk about my planning process. We all have some sort of planning process that we follow, whether it be formalized or informal. Some of us like to follow that format a little bit more rigidly than others, but whatever the way that you work, there should be some sort of process in place, and that process is really what I'm going to focus on today in explaining how I worked through this case with Scott. And one of the things that I like to do early on in the process is articulate that process with advisors and clients so that we all get on the same page very quickly. And you'll see that how that process weaves through my presentation today. So starting out, really what we want to do is we want to understand why we are working together and on files. And one of the challenges is, of course, collaborating on a file and having the confidence in collaborating on a file. So what I wanted to do is talk to Scott about what he sees are the key benefits of working on a file jointly rather than doing it on your own. So I'm going to play Scott's response to that question, and hopefully everybody can hear that okay.
To give you an example, many of my clients are business owners, and they're entering the twilight part of their career, and they're starting to think about succession planning, tax planning, and just how to wrap this up and get the most value from the company. What we're starting to see now is these clients are relying on us to work with their accountant and lawyer, and this is just a comfort zone that I'm not comfortable with. So Brad will basically mediate the meeting with all three of us process is quite unique. What happens is yes, the client or the accountant will ask a question. Brad will then reply saying, have you thought of it like this? And then we start on a different track. A lot of the times we go into these meetings, the clients think they have their entire plan covered and nothing's changed since they created this plan at the inception of their company, which, as we know, life changes in many different ways. So we start to tackle that. And I just basically will sit back, let Brad do the talking, and he takes control of the meeting. I didn't ask him there to talk over him. I asked him there to take control, get these answers, and then proceed and execute. So it's knowing when your expertise has reached a limit. That's what I'll ask Brad.
So in working with Scott, I also asked him a question around sharing any specific moments where he felt he was glad or thought he was glad to have someone else with him in the meeting to answer questions. And this particular situation happened a couple of years ago when Scott and I were working on a file together. So I'll let you hear what Scott has to say there.
I have a client, a husband and wife, no children, corporation that was full of cash, and they were looking for ways to tax shelter money. So my immediate thought was discussing a low cost of insurance, high cash value product. And I wanted to bring Brad into the meeting to meet with their accountant and themselves to discuss some of how this product works. So we all met within the accountant's office, and the accountant was clearly not for the recommendation that we were making. And what was happening is the accountant was challenging us, and we, as in Brad, had all the answers and basically had the accountant left with no ammunition at the end of the day. The client ended up leaving the meeting with all the information and just not the one viewpoint of the accountant. It certainly helped them make a more decisive decision versus insurance adverse accountant.
So well, thanks, Scott, for those comments, and we'll continue on with the process here. The process is really about making the client feel comfortable as quickly as possible. And so that initial meeting can take many forms, but there's usually a quick feeling out process and some trust building discussion, followed quickly by an overview of what it is that I'm going to do for the client. And it's important to do this level set as even though advisors introduce why I'm coming to the meeting prior to the meeting, the client's not always 100% clear what I'm there to do. So it's really important to provide that overview and get that green light of moving forward. And once we've got that green light moving forward, then we can start moving into a series of open-ended questions and gathering the hard facts on the case. Now, how do those initial meetings happen? Sometimes in pre-COVID times, the initial meetings could be done over lunch or sometimes over a round of golf or other scenarios. But in today's environment, it really is important to do that level set up front, because a lot of these meetings are now happening like this on video chat. And so it's more difficult for that relationship, that quick relationship, to be established. So very important to make sure everybody's on the same page and have that process in place. But once we've gotten started, this is really where we get into gathering all of the facts. And I start out with in the initial meeting is gathering facts that make the client feel a little bit more comfortable. Now, I know a lot of advisors that are meeting with me with clients have already built that relationship of trust, and that's why they're able to bring me into a meeting. The challenge is sometimes the client still needs to have that trust with me. So once I've built that trust through some of the soft fact questions about their family and their business, I start to formulate some of their understanding about their attitudes about succession and continuation. And then the hard facts are a little bit easier to collect. The challenge is always figuring out that balance with the clients. And it's really important to make sure that the client is comfortable with, as I said, the process that we're working through. So particularly when I'm working with business owners, one of the things that I want to do is ask them a series of questions to get them thinking about things that they may have thought about in the past, or they may not have thought about in the past and not articulated to anybody, or they may not have put a plan around it. And so if you think about what you could ask a business owner is a simple question like this: what happens to the business tomorrow if you're not here to run things? And what we're really saying is that you've passed away. What does your staff want to know, or what do they need to know? Do they have job security? Is payroll going to continue? How do operations get affected? What are they going to ask? Who are they going to ask these questions to? And is that person ready with the answers? What is the potential impact on customers? What will be the messaging to customers? What role will your spouse play? And this is an important question because it gives us some insight into whether or not this spouse is going to be involved in continued operations, or whether or not they're going to be transitioning or wanting to transition the business very quickly to somebody else. And then this last question is, who has authority to make banking, payroll, and operational decisions? These questions are really easy to ask a business owner early on in the questioning process, and it really gets them thinking through where we're headed with some of these things. Now, all of the answers don't lead to an insurance sale, but a lot of the answers will help us guide towards that insurance sale that we're looking for in this process. Once we get past the initial questions and some of the soft fact questions, we're going to be gathering the hard facts. And the hard facts is where a lot of advisors start. And I've seen situations where by starting with the hard facts, clients start to feel uncomfortable about why they're answering these questions and why the advisor is asking these questions. So starting with that, with the soft facts first, often builds that confidence in, I'm gathering information to look at a bigger picture here. So there's a list here. I'm not going to go through all of these, of course, and we're collecting these. Many people use fact finders to collect this information. Some people just will have a list that they'll send to a client and request that information back. But there's a few key areas that I want to make sure I get really early on in the process. And that's the first one is the corporate diagram. And I'm going to talk about the corporate diagram in this case that we're going to describe here shortly. And the next thing is the existing insurance and coverage. The reason that I want to know about existing insurance coverage is if I get all of the details on the existing insurance, if they have any, I know right away whether or not they can get insurance. They've bought it in the past. There may be some ratings applied to that insurance. It starts to give me a picture of that client from one perspective. It also lets me know if we have conversion options available to us, which can be important in this process if something happens as a hiccup for the client. The other side of things that I really want to make sure I understand is the unanimous shareholders agreement, as well as their wills, and I want a clear list of their liabilities. All of these things will tell me a very clear picture of where we're heading. And the rest of the hard fact details will fill in some gaps. Okay, but those are the ones that I really want to make sure that we get a focus on. So after the initial meeting, the first thing that I want to do with an advisor is have a debrief session. And the reason that I want to have that debrief session right away is because we want the advisor and myself to know exactly where we're headed and the direction that we're going to take and who's doing what. So I asked Scott after the initial meeting, in this particular case, in fact, after the initial meeting, if he could recall any of the key benefits that came out of the discussion. And this is what Scott had to say here.
For me, the benefit of reflecting on everything I just learned in that meeting, I find it quite beneficial to see other people's processes and question asking. Brett, as I've mentioned before, a unique way of asking questions and just having the client think of things differently and having them actually come to their own conclusions after without any recommendations from ourselves. The other thought that I've enjoyed is just how beneficial it is to start breaking down the buy-sell with the client. The things that they had never thought of, and a lot of times the client is left in shock that none of his circle of professionals had advised him that these scenarios could take place, and this buy-sell had all this missing information that should have been seen before. The other process is just actually starting to go through how you require, let's just pause.
So as you can imagine, it's kind of tough sometimes when you're doing these questions this way, but I appreciate Scott's honesty and things there. And then as we're managing the information collection, so I wanted Scott to comment on if he had any issues in how we collect the information, because sometimes I'm going to be involved with the client or with their accountants and their lawyers and getting information, and keeping the advisor in the loop is extremely important. So I wanted to make sure that we asked Scott about that, and here was his comments there.
I've known Brad now for 10 plus years, so my level of comfort with Brad is quite high. I have zero issues having the client send their information directly to Brad. I'm busy enough with my own practice, and Brad, he'll basically, he asks exactly what he needs. And what happens is a lot of times you start to uncover a lot more information or assets that the client has. So for instance, we're asking for investments in company value. Well, all of a sudden we have a property in BC that just comes about, or a property in the US. And this process of asking for new information seems to always open up a new avenue of assets that hasn't been discussed. And of course, then we dive into the tax talk as well. So he emails me with all the correspondence with the client CC, and then after this information is received, he'll then phone me and discuss, we should maybe discuss this with the client and go from there.
So I want to thank Scott again for participating with this process. It's a little bit different of a way to do things, but I appreciated his comments today. The process itself, the next stage of this, and this is where we really get into collecting the information from a client. Now I'm going to start to talk about some specifics about this case that we worked on, and it took us about 3 months from the initial conversations with the client to gather all of the information from the various sources. So you know, the client's going to his accountant, they're going to their lawyer, they're managing their priorities of their business. There's a balance there on how hard you can push a client for information and how relevant the information is to the process, and whether or not that will delay the process at all. And in this case, it took about 3 months, as I said, but I've had them happen quicker than that. I've recently had a client file where we were working and the client had all of the information back within a couple of weeks, which was stellar on their part, because it doesn't happen that quickly very often. But once we had all the information, we were able to meet with the client about 2 weeks later to discuss our findings and talk about the next steps. So I'm going to start to jump into this case now, and the areas of planning from this case that we touched on. There's a number of areas, including estate taxation, around the capital gains tax. We talked about estate freezes on this file. We had conversations about liquidity in the estate and in the holdco. We also talked about charitable gifting from the estate here and buy-sell planning and funding. So it does cover a wide range of topics. And most advisors, when they don't collaborate on a file, what I find is that they focus on one of those topics. And there's nothing wrong with that. But if we want to look at a more holistic view of a file and make those cases much bigger, having a view of all of these different areas can really be beneficial to making that file much larger than it initially looked. And that's been my experience. So I want to talk about the estate tax. When does it become an issue? And typically, if a business is flush with cash, the estate tax on the business isn't as much of a pressing issue for the client. Where it becomes more of a pressing issue is where the assets that are in the business that make up the value of the shares, which is causing the tax problem, is when those assets have to be sold or liquidated in order to provide access to that value. So an easy example of that would be a business that has real estate holdings within it, either a building or land, and that's the bulk of their assets that are making up that value. And so what happens is I can't easily sell those things to access cash. So now the estate tax becomes a much more of a pertinent issue for that client. When I'm looking at estate freezes, it's lots of people look at the estate freeze and clients will say, well, my accountant has a plan for those frozen shares, I don't have to worry about them. And so when I hear those kinds of comments, what I'm looking for, well, what value were the shares frozen at? What's the ACV of the frozen shares? What happens on death to those frozen shares? And are they being redeemed? So when we hear this, the accountant has a plan for it, usually it means that there's some sort of redemption schedule that's in place for those frozen shares. But how long is that redemption schedule, and how does that process work, and what happens if something happens prior to those shares being redeemed? All of these questions start to formulate opportunity for us when we're looking at the insurance side of things. And then we get into the buy-sell planning and funding, and there's, as you all know, a whole number of things that can happen with unfunded shares, or what happens on various triggering events within the organization. How do we move those shares from one owner to another owner if there's insufficient funding? And so we want to look at the financial statements of the company to understand the position of the company and how long is the estate going to wait if there's no insurance in place? How long is the plan for the estate to be paid out? So oftentimes I see 5 years or more on payouts. One of the big questions that I ask business owners around buy-sell funding is, how does your estate guarantee that their value is realized? Because once you've passed away as a business owner, the position that you've put your family in is, what if the successors of the business, the people that are continuing on that business, fail? And the business value isn't there to buy out or to continue to pay out those shares. How do we realize that value that you built and was supposed to be transferred to your family? That question alone oftentimes raises a lot of, well, what could I do about it? And we obviously have the answer to that by providing liquidity at the time that it's needed. Okay. So let's dive into a subset of the information. I'm not going to give all of the details of this file, of course, today, because that would be much longer than a 1-hour presentation on this. but a subset of the information is we have a family that has a holdco that has shares in a successful property and casualty insurance company and another related company. So we have holdco and we have two operating companies. The client is in his early 50s. He has a spouse that is not involved in the business in any way. They have no children, which makes this planning a little bit different. We're not talking about transitioning the business to the kids or succession to any children. So we really need to know what's going to happen with that business, and the buy-sell really came into play on this file. We have wills that leave everything to each other, and then there's some specific bequests, and then the residue gets designated to a charity. And one of the challenges with that is that most of the value of the estate is tied up in the shares of the company. So how do we deal with that getting to the designated beneficiaries of the estate? So on the next slide or so here, I'm going to talk about the corporate diagram and the importance of that. But I put a bold thing here. What we're really looking at here is we have estate liquidity issues, we have charitable giving issues, and we have buy-sell issues just identified in this subset of information. So when we go to the corporate diagram, now this may look more complicated than it needs to. It's not a very complex scenario of companies, but we have client A is the client, his spouse is B, and they own the shares in their holdco 50-50. And that holdco owns voting shares in OpCo 1 and voting shares in OpCo 2. Now you'll notice the number of shares. I've highlighted the number of shares that the holdco owns in both OpCo 1 and OpCo 2, and put a note there that this identifies that there's other partners and buy-sell funding might be an issue here. It's really quick to look at when you see 30 shares or 40 shares. If that's not 100%, which is usually the way it's written if they own all of the shares, you've got a pretty good idea that you're going to be doing some buy-sell funding or some buy-sell conversation. The far left shows me the preferred shares that are owned by the client in operating company 1, which he did a freeze and took back shares on 2 separate occasions, actually, which is why we see two share classes there of preferred shares. And we know that that estate freeze has been done, and we know what the value of those shares are, which is nice to see. Now, one of the reasons why I put this "when is the tax event" at the top is when I see 50% holdco owned by husband and wife, the first question I want to ask is, what are we dealing with in the transition of the businesses? Are we moving the spouse in to operate as the deceased spouse was in the past, or are we transitioning the business to somebody else? In this case, we were transitioning to the remaining partners. So really the only assets that are held in that holdco are the assets of the operating company. So the question is are we winding things up, and are we incurring a tax event on the first death? Oftentimes when we talk about estate planning, we're talking about joint last to die insurance. But if we're going to wind things up, we may be looking at single life insurance to wind things up, because that tax is going to be due on the first death. Okay. So there's a lot of information that we can gather here from the corporate diagram. And this is one of the, as I said, one of the more important documents in the case as we move forward. Now, the estimated value of the shares, this is something that I added to their corporate diagram just to make sure that I had a clear picture of what all of their shares were worth and where that fit into their net worth statement. Okay. Additional information, the client does have a buy-sell for the shares in the holdco, and they own So the shares that the holdco owns in the opcos, so there is a buy-sell agreement there, but there is insufficient funding to cover the buyout of the shares, both the common shares and the preferred shares. So there's a little bit of insurance in place at this point in time, but not enough to cover the values that are required. We do know that operations can continue with the other owners, so there's no need to find an outside buyer or to look at a situation where the client is worried about their spouse stepping in and working alongside people that they haven't typically been working alongside. Okay. The client will likely keep their common shares and receive dividends well into their retirement years. So this client has really no intention of retiring in the next 5 years or 10 years or anything like that. The freeze that they did was really a position to move shares to the other owners in the P&C companies that are involved, and they can continue to operate as is. He will step back from his day-to-day duties, and so that's where the changes will happen for their family. So we do have some term insurance in place in Opco 1, but the other owners are not in the position to fund the remainder of the buyout. So we do have a liquidity issue here. Again, an opportunity to sell life insurance is always welcomed when we're looking at these files. Okay. So some more information. As the couple has no children to leave their estate to, their lawyer connected them with a foundation to receive the value of their estate on the second death after some bequests have been made. And the reason that I raise this is it's important when you see this to work with the client to help them understand what the charity can receive and what they're willing to receive. So as I said earlier, the client, most of the assets of the estate are tied up in the business, and a foundation really doesn't want shares in a business. So we have to liquefy those assets really before we can make that bequest. So what we wanted to do is make sure that the company was in a position to easily liquefy those shares and make sure that the funding is there to both manage the buy-sell and to pay out on those preferred shares. Okay. So once we had all of the information, we were able to provide a summary to the client. I'm not going to go through the details of that summary today. That's it can get a little bit more detailed than we want to show in a short presentation. But what we wanted to do is make sure that you understand that we're having a conversation about what might be enhanced in their current planning. And in this file, really what we did was make sure that the client understood that they needed to adjust a few things in their will, because the way that the estate was going to transfer would have transferred the shares to the charity. Okay, and the charity would have then been pushing the company for a payout on the value, because they don't want to manage those shares. So we wanted to be cognizant of that and work through that process with the client. And so we counseled the client to talk with their lawyer and their accountant and make a few adjustments to that plan. When we get into discussing the potential solutions, it really is a collaborative process. So instead of just telling the client that they should buy life insurance, what we try and do is help them understand that they have shortfalls either on liquidity, for buy-sell, for tax, or the specific requests that they were making, and ask them what they thought that they might be able to do to fund those things. And it very quickly moves back to an insurance discussion, because when we talk about the different funding mechanisms for the estate in this particular case, it really is about selling the shares. So it really came back to the other owner's ability to fund that value and fund that buyout. And so it made the insurance a really easy solution, rather than putting the other owners in a position where they were going to have to come up with significant amount of cash in comparison to their current valuations. Okay. So what did the client do? The client agreed in this situation that we needed an additional $1 million of coverage, and that was in order to cover some of the tax that would be due on the shares if they chose to wind up the company on the first death, but also to make sure that the company itself had enough liquidity to buy out the remainder of the shares, in addition to the insurance that they already had in place. And so right now the client is reviewing the options of overfunding that policy based on some additional discussions around the value of tax sheltering money inside that policy, and what that would provide for them, both in retirement, and if it's not used for retirement, how it would enhance the value of their estate, which would also enhance the charitable donation after any residuals are left over. So lots of discussion around that, and lots of discussion around the ownership of where the policy would sit. The initial thought from the client was that he would have the ownership in one of the operating companies, and because it was primarily for the purposes of buy-sell, and we talked about having it in the holding company so that he could put additional assets in it that he could use in retirement if the buy-sell wasn't necessary in the next 10 or 20 years, when you would typically see term insurance used for buy-sell purposes. We would make the beneficiary of enough of the life insurance proceeds up to the operating company, so that they would have the cash to move into the purchase position. So before I move on, I think at this point in time I'll open up to some questions. And Emily, do you want to? I noticed some questions coming in, so you want to open it up for some questions at this point?
There's actually, I think they're all just addressed. They were just talking about the sound, and unless you see something different, I think we can just move forward.
Okay, so one of the excuse me, one of the things that I wanted to make sure everybody understands is that the contacts for this type of casework is represented across Canada with the tax and estate planning team. We have Frank Abate in Ontario working as our national director. We have Chris Britton working in the Maritimes, and myself working on the Prairies. And I would open it up to any questions that people have around the estate planning process, and if they had any questions on this case itself, to throw those into the chat.
Okay, we have one question here. Would the premiums be paid by the OpCo or out of his Roth?
Yeah, so we may see a combination of the two things in this file, and I'm just going to go back to the corporate diagram here. And where we may see it from both is we may see the premiums that are related to the death benefit that are funding the buy-sell paid by the OpCo, but any additional funding that might go into the policy being paid by the cash that's in the holding company. So we could have a combination of deposits going into the policy. Obviously, we would make one payment to the insurance company, likely from the holdco, but we may have money coming from the OpCo down to the holdco for the purposes of the buy-sell coverage. I saw a question about whole life versus universal life really quickly pop up there.
Yeah, I see it. Can you elaborate a bit more on the use of whole versus term?
Yeah, so So when do we use whole life and when do we use universal life? This is a question today that is getting asked quite frequently because it does seem like everybody's using whole life insurance. What I would say is if you have an increasing need for coverage, you probably are going to want to have a look at whole life insurance because it continues to grow over time. And I can do a paid up policy in the period of time while the client's working, but I may not need that big payout that's matching the growth of the shares until his death. So that's where a whole life policy really fits nicely into that scenario. But universal life, let's not forget about the use of universal life. I feel that the market has almost abandoned universal life, but I still use and recommend universal life quite frequently when we have things that are fixed value. As an example, in this case, if we were just looking at a buyout on the preferred shares, we know what the preferred share value is, so we don't need that insurance value to grow over time. And if the client doesn't need to put any additional cash or tax shelter money inside a policy, they could easily use a universal life minimum funded scenario where the policy pays out those preferred shares. Now, again, we could still overfund that universal life policy. And in today's environment, we have lots of conservative investments that people won't shy away from inside these types of planning cases. Now, there is still a use for universal life with clients that are doing it for different purposes, and they want to manage the assets inside that portfolio. Obviously, in a whole life policy, we can't manage the assets. We just get told how it's going to grow or what the expectation is for growth. Whereas in the universal life, we can still manage that policy on behalf of the client. So it really comes down to the case facts and how we're going to move forward with the recommendations. That's why I didn't put any specific recommendations in place and go through any different policies here, because I think that part of the process is really reliant on the advisor, myself, and the client coming up with the best solution for the case facts. We have some other.
We have the next question. When calculating the tax event, are you looking at the postmortem plan? Do you involve the accountant in this calculation?
Yeah, so it depends on the file, on the complexity of the file, and whether or not there's planning that's already been done. And one of the things, if I'm just going to slide back a couple of slides here, that you'll notice on this slide when we're gathering the hard facts, one of the things that I list here is any accounting or legal memos that have outlined existing planning or rationale for existing planning or future planning. Okay, so I do like to engage with the accountant and the lawyer on the existing plans if they've been put in place or discussed. I will tell you another case that I was working on with Scott recently. I did have a conversation with the accountant about doing an estate freeze for the client because the client mentioned that the accountant had mentioned something about a freeze. They knew the terminology, but they knew they hadn't done it yet. And it looked from all purposes of what we were talking about that it made sense for them to do a freeze. So I wanted to have a conversation for sure with the accountant about what they had recommended and what the process might look like moving forward and how we could support that in collaboration rather than coming up with our own set of solutions that was maybe incongruent with what the accountant already has recommended. It's always a benefit to have that conversation if we can. And then the other thing here that I've written is any agreements that have been established or discussed, right? And so that just falls into that as well. As far as postmortem planning goes, I try not to get into too much discussion around postmortem planning. I will talk about a little bit of the options, but one of the challenges that we have with discussing postmortem planning is postmortem planning could change, and the things that are available today could be very different than the things that are available in the future. So we mention these things, and we look at the consequences of using postmortem planning, but I'm not relying on it solely to fill the plan. Hopefully that answers that question for everybody.
Sounds good. Would you also have a list of questions to use for individuals?
Yeah, I mean, as far as individuals, I'm assuming that we mean non-business owners. It would be very similar to these types of questions, but obviously not as much detail, right? There's not going to be a buy-sell agreement. There's not going to be corporate financial statements and things like that. There's not going to be a unanimous shareholders agreement. However, there is still going to be a will. There may be some accounting discussions that have occurred depending on the estate. So I want to list all of those things. The list itself doesn't change dramatically, just taking out the business focused things. One of the things with individuals that's interesting is lots of people don't ask the details. Sorry. Lots of people don't ask the details of how things are going to move forward in their personal estate. And one of the areas of individual planning, I originated from Ontario, so I can use this as an example. If you're in urban Ontario, there's a good chance, if you've got some wealth, that you have maybe some recreational property in cottage country, as an example, which is kind of the mid-north Ontario, and those values have from generation to generation increased quite significantly. So we see the same thing in the west here, where in Alberta we would see people owning property maybe in the Okanagan area that has increased significantly over the last generation. So individual planning oftentimes gets into those types of discussions, and so listing all of these assets out is just as important as on the business file.
Okay, Universal Life, thoughts on application of YRT versus level cost of insurance?
Oh, philosophical discussion. Okay, so YRT versus level COI. I believe that this question is a comfort level question with the advisor and the client understanding what it is that they're buying. So if you're going to use YRT, be very cognizant of how you're using YRT. So I have no objection to using YRT. Many companies have gone to structures where YRT is now paid up at either age 85 or 90 or after a certain period of time of payments. That has alleviated a lot of the older issues that we saw with YRT, where when you hit age 80 or 85, the YRT cost of insurance would exceed the face value of the insurance policy over the next period of years, which we wanted to avoid. Level cost insurance, I'm a big proponent of using level cost structures on Universal Life. So you can, as an example, use a YRT format and create a level cost environment for your client by using a minimum interest rate that's guaranteed on the policy and asking the software to show a levelized line on that YRT. That will oftentimes yield better results, particularly if you're using it in a corporate insurance situation, because you get a higher CDA credit oftentimes doing it that way, because of the YRT ACB calculations are a little bit different than the level calculations. So again, depending on how you're using the structure and what you're using there, I'm a proponent for either YRT or level. Just make sure you understand what you're doing with the policy. And if you need help on that, any of our BDEs, Emily down in Calgary and the BDEs across Canada are more than happy to help have that discussion. I'm also, Frank and Chris, we can all talk very well on those topics and where it might fit and where it may cause issues. So feel free to have that conversation with us.
Okay, Rhett says, great stuff today, Brad. Thanks. What are some comments or questions that a client might say, ask, that would make for a good opportunity to introduce you?
So basically, you're asking for a profile of client. What's a good profile? I always say a good profile for a case to involve me in is one where you're not comfortable working on the file by yourself. And so that's going to range for every advisor. Newer advisors that aren't familiar working in business cases are going to call me on cases that an advisor that's a little bit more seasoned, that's worked through some of these files in the past, wouldn't necessarily need to call me on. So an optimal profile, if you've got a business owner that's insurable, that has some cash flow, right? Because if they don't have cash flow, they don't have money to pay premiums. And if they're not insurable, they can't get the insurance. So we're probably spinning our wheels.
That being said, I'll throw one in there. When is it ideal for you to be introduced then at that point with the proper profile of client?
When is it ideal? Okay. The earlier, the better is what I always say. The longer we wait to get engaged on a file, the less impact we can have on the file. So if you can bring us into the file earlier, then we're going to be able to help more on that file, and that's what I would say to that. And there's no specific time. The sooner the better is the answer.
That's great. I think that's all for the questions today.
I thought I saw one or two more come in there, Emily. I did see one come in about putting up the contacts. So I threw that, the contact information up again. Just want to make sure that there was nothing else there. If there's no further questions, thank you all for joining us today. I really appreciate your time. We will be making this recording available on Win Big, as well as the presentation slides. And with that, we'll wrap up. Thank you, everybody, for your time today.
Great. Thank you so much. Have a great day, everyone.